Now, even though I don't necessarily talk a ton about QDTE, XDTE, or of course RDTE, the one-day till expiration covered call strategy ETFs that are brought to us by Roundhill. All three of these ETFs now have been trading for quite some time, and I personally even own some of these weekly ETFs in my portfolio as of right now. But when it comes to these weekly paying ETFs, they sort of are confusing, especially to newer investors. So in this video, I want to break down exactly how all three of these Roundhill ETFs work that of course pay out weekly. And then towards the end of the video, share with you guys the total returns and how much you could potentially earn by investing, say, $10,000 in each of them. So if you're an income-focused investor that's maybe interested in what these ETFs have to offer, then make sure to stick around, drop a link down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. So all three of these ETFs have a very similar strategy. The only difference is they're going to have different underlines. For example, RDTE, the small cap one day till expiration cover call strategy ETF, is going to utilize 0 day till expiration options on a small cap index, or the quote unquote small cap index as defined in the fund's prospectus. Now the difference between RDTE and XDTE is that this one is going to do so on the S&P 500, and lastly QDTE is going to do so on the quote unquote innovation 100 index. Now the ETF strategy is pretty simple. They utilize 0 day till expiry, 1 day till expiration options, and like I shared with you guys, all three of the different underlying indexes, and then seek to provide overnight exposure to generate income each morning by selling out of the money 1 day till expiration calls on the index. Now to make this very simple and explain it, especially for someone that's not super advanced with option trading, you can utilize different time frames when it comes to options, and these are utilizing very short duration options, which are trying to harness volatility by doing so and exploit structural market mispricings. Now all three of these ETFs, as you guys probably know, offer weekly distributions, which is still somewhat crazy to think about, especially because not all that long ago, a lot of investors weren't even all that thrilled with monthly distributions. And I say that because not all that long ago, it feels like monthly distributions were somewhat of a new thing. Now going through all three of these ETFs, QDTE, for example, has a 24.55% distribution rate, where XDTE as of right now has around a 26% distribution rate, and RDTE has a 27% distribution rate. So all three of these ETFs are what I personally would consider ultra high yielders because they yield upwards of 15 to 30% or more. So by this point, I want you guys to at least sort of understand exactly the overview of all three of these ETFs, how they seek to exploit structural market mispricings and these short duration option strategies to earn a lot of income, which is going to be paid out to investors on a weekly basis. But I think it's also important to sort of get an idea, at least historically, what each of these ETFs have actually paid out to investors on a weekly basis. Now, like I said earlier in the intro, I currently do hold some of these ETFs. I do have some shares of QDTE in my portfolio, and although I haven't necessarily made a ton of money off my position as of yet, it's honestly been a blast getting paid out every single week. And to be honest with you, most weeks I forget about it and I get a notification saying that, what do you know, I got paid out again. Because I'm so used to getting paid out quarterly or monthly, it still seems kind of weird. But I'm not complaining whatsoever. This ETF, as you can see right here, QDTE, has at least paid out over the last several weeks, 23 cents on a weekly basis, 18 cents on a weekly basis, 24 cents, 33 cents, 18 cents. And what's still sort of confusing maybe is that some of these weeks might seem a little bit low, say 18 cents for example, but remember that's on a weekly basis. If you times that by 4, that's still a massive, massive yield. Now towards the end of last year, we saw an 80-cent payout and 86-cent payouts, but since inception, the payouts have been sort of all over the place, so it's more or less a gamble in what's going to happen in the market during the time frame. But all that to say that even the smaller payouts have still been pretty massive if you annualize them out. Now looking at XDTE's weekly payouts historically, they're pretty much more the same. I mean, there's some massive ones, some of them that are a little bit smaller, but consistently I do have to say that even the smaller ones have equated to a nice yield if you annualize it out. So far, I bet you guys are asking yourselves, well, these ETFs seem amazing. They try to harness volatility and utilize 0 day till expiration options and earn a ton of income by doing so. But as any higher yielding investment, I'm sure you guys know what we're going to talk about next. And that's the fact that all three of these ETFs, QDTE, XDTE, and RDTE, are all down in the red in the max time frame, which is not necessarily what we want to see, especially if the fund isn't paying a massive, massive yield of say 50 or 100%. Now, yes, it is a fact that all three of these ETFs have decayed over time. I mean, QDTE is down around 12% at the max time frame. XDTE, on the other hand, is not down much whatsoever, around 3.19% on the max time frame, which personally I would barely even consider that being down. RDTE is about double that, or around 6% down in the max time frame. And I know a lot of income investors are going to say you have to look at total return. It's not all about price return, especially with these ultra high yielders, which don't worry, we're going to do so in a second. But this is one of my main fears of buying into different ETFs or stocks that matter that say offer a distribution rate of 15%, 30%, or even above that. It's the fact that over time, I don't want to have my underlying investment drop down lower and lower in price, which is a lot of times what does happen in the long run. Now, these ETFs are relatively new, and I will say they haven't really decayed anything too crazy in my opinion. And for me personally, I started buying QDTE in the $40 range or under, so I'm actually up slightly on my shares because I started buying right in this range. Now, who knows if in the future QDTE along with the rest of them will keep trading down to the right. And in that case, you would probably have to use some of your weekly income to buy more and more shares to keep lowering your cost basis if you don't want to become significantly underwater. Now, I've talked about in previous videos the fact that a lot of these covered call style higher yielding ETFs do decay, and that's because of the underlying strategy, which again I've talked about in previous videos. Check out some other videos on my channel. But that's probably the main concern that I have as an investor is of course NAV decay, because the income potential is there. We've seen that historically, but over time I don't want my investment to be underwater. So what can you do about that as an investor that does want to have some exposure to these names? Well, for me personally, I keep it pretty simple, and I only buy names like QDTE or XDTE or whatever the case might be. These higher yielders do have the potential to decay. I only buy them on extreme red days and really lower my cost basis. If it's a green day, if they're up in price, I do not touch it with a 10-foot pole. Now, by doing that, like I said, at least so far over the last month or so, which is a short time frame, I am up on my shares just a tad plus all that weekly income, which I've been getting paid weekly. But enough about price return. I mean, these are income-oriented ETFs anyways on the max time frame, and this is since September of last year. So this is the max time frame that we have to go off of because one of the ETFs has not been trading for that long. But over this time frame, as far as price return or price decay, however you want to look at it, plus all the income included, these ETFs, all three of them are up into the right, and they are all positive. Number one, QDTE is offered around 15.3%, RDTE is offered around 11, almost 12%, and RDTE, that lasted the bunch, has offered around a 10.5% return. Now, these total returns are not the best thing I've seen across the entire market over this time frame, but I will say for a vehicle that's going to offer you weekly income, and especially because these names are somewhat risky in my opinion because of the underlying strategy, they've done pretty well without a doubt. Now, lastly, with a $10,000 investment into any one of these ETFs, more or less, because they're all yielding somewhere of around 25%, that's going to earn you around $2,500 per year, or if we divide that out by 52 weeks, because again, these ETFs pay weekly, which I still am getting used to. Each of these ETFs, based off of the current distribution rates with a $10,000 investment, are going to pay you just shy of $50 per month. Now, that's not necessarily enough money to retire off of, but I'm not going to lie, a $10,000 investment that's going to pay you around $50 a month is sort of unheard of. So now that we talked about QDTE, XDTE, and of course RDTE, we talked about their overall strategies, the performance of the fund so far, and how much an investor could potentially earn with a $10,000 investment. I most importantly want to hear from you guys down below. Are you currently buying any of these weekly paying ETFs? And if so, let me know which ones you're buying in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.